Hello, everybody. Thank you for joining us for today's public webinar. Hope you're all doing well. Good morning, Jim.
Good morning. As we've said before, we do these to promote our educational programs. It's going to be very short. Jim will do a short commercial later. The intensive starts a week from, I think it's a week from today, but it's too late.
It starts next week on Wednesday. It starts next week on Wednesday, October 16th.
But it's, you know, if you're not having, it's, unless you've been in a prior intensive, it's probably too late to get there. But anyhow, we'll do a little commercial later on. Okay, start off with the markets. This is probably among some of the most dangerous markets we can imagine. RJ, would you show the bonds first of all, the 10-year bond, please?
Yes.
Okay, I'll give you the screen, RJ. There you go.
Okay.
Okay.
Can you see the screen?
No, I'm not. I don't know why I'm not getting the screen. Jen, what am I'm clicking on.
Usually it should just, you know.
I guess give the screen back to Jim and then I'll take it back again. Hopefully that fixes it.
Or do you want me to take it? I mean, I can give it back. Jim, I'm going to give you back the screen momentarily here.
Okay.
Okay, there you go. Screen hockey, everybody.
Okay, you can see my screen, right?
Yeah, we can see your screen, and I'm going to give it back to RJ now.
Okay.
Sometimes technical issues happen. There you go, RJ.
Okay.
Okay, now can you see it, Jim?
Nope.
Just click on that the wheel, the go to webinar blue color.
Okay, well, I know what it looks like. So look at RJ's screen. Oh, I see. What it came up on another. I've got 4 monitors. It came up on another monitor for some reason. I have no idea why it did that. Okay, I now have it.
Okay.
Well, I think I have it. Okay, what I want to show is that the yields have been rising sharply. And I have, if you remember, for several months, I have been talking about the potential for stagnation. Stagnation is one of the worst situations we can have as traders in the market or as investors. Stagnation occurs when you have increasing unemployment and high inflation. Now, this isn't disastrous, but the you had the jobs report on one end this morning, and then you had was it CPI or PPI? I forget which one was, you know, higher than expected. It's not a good combination. Now, I may be wrong. Maybe we don't have stagflation. I've lived through those periods, and they are really bad markets, and they're difficult markets to trade. But it's a thought. Okay. Next.
Jim, just to think, I think you said stagnation earlier on, but you just said stagflation. So just
stagflation.
Stagflation.
Okay. RJ, if we can now look at the bar chart of the ES, please. Okay. So this is another, if you can see, what is it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's about 18 days where the market's gone nowhere. And this is, you know, you made a new high yesterday. You got above the big number, the 8,000 number, but no follow through. Today, the market could have broken today with the inflation that was a little hotter than expected. You got a little bit of liquidation, but no serious selling in there. So the market remains in a very difficult holding pattern. The month of prior to elections is often a very difficult month to trade, as the people go back and forth of who's going to win the election and what's that going to mean and the economic policies, etc. Currently, the market's been one time framing higher since the low 3 days ago, and today is forming an inside day. Very narrow inside day. Again, tremendous uncertainty. Okay, let's go back to my
Your screen?
please.
Okay. I've given you the screen back, Jim.
Thank you. Okay, so it's an inside day. Here's the low of yesterday's value area, the low of today's value area. Basically, they're the same. Just nothing going on, no certainty in the market. And these are the days that you are so much better off just stepping aside and leaving alone. Too many times, traders can't resist thinking they're going to pick up a few ticks here and a few ticks there. And when the uncertainty is this high, it's a very dangerous trading environment. And I understand how difficult it is sometimes to leave your hands off of the market. But that is very often what is required. You get on a day like this, you think you're going to do a little trade, and you're going to make a couple ticks, then you get underwater a couple ticks, then you do something silly, and you end up the day and it's not a very successful day. So part of trading is knowing when just to leave the market alone. Okay? I don't have anything more to say about markets than that. You are in a this multi-day, very tight range. One of the things, and I'm writing the article, as you know, we're doing these 6 articles. Last week, we did an article called I'm Never Alone. And that article addressed, so many times the issues we have, that little voice in our head that can get us in a lot of trouble. For example, you got a loss, to take the loss, but the little voice says, oh, you'll be okay. It's a good position. And then the little voice may tell you to double down. I mean, we do most of the damage we do to ourselves. Now, this article coming out the following Monday, which will be the 5th, is what I have, at least at this point, labeled tone for a day. And today there is no tone. Here's the opening. We're back and forth through that opening. I'm going to split out yesterday. Because yesterday, early on, fit what I called a tone for the day. So the market, it just starts off and it's one time framing higher throughout, the first several periods. And then the market just moves sideways until you get a little run up late in the session. Days like yesterday can really, they can be simple. If you just stay with the tone, and the tone was clearly up, value was clearly higher. If you just stay with that tone of the market, you have a very good chance of being profitable. Too many times we get in our mind that, and this is where you get misled. You had several periods yesterday where the low of the 30-minute bar was at a very exacting level, and that's usually a sign that it's weaker hands buyers. But that doesn't mean, and what sometimes they say, oh boy, then I got to fade this market. When you get the tone for the day, it may maintain that tone the entire day or close to that day. But just understand that there's no bigger picture things going on in the market. Don't fight it. Now today you don't have a tone for today. You have a rotational day. We still remain within the AB period. You have bonds that are giving a warning sign in here. You have stocks that have moved sideways basically for an awful long period of time. And it's a treacherous market. But try to stay objective. Stay with a day time frame trade. Look to see what is value doing. For example, yesterday, the tone for the day was up. Today, there is no direction to the market. We made the low in A period, we made the high in B period, and we've moved sideways here. It's very dangerous, great market to stay out of. Again, as I say, when you've got the election, the month before election, so sometimes you get a lot of volatility, and sometimes you get a tremendous amount of uncertainty, and there is uncertainty out there. You look at the polls, and one of them tells you Trump's winning, another one tells you Harris is winning, and there's a tremendous amount of uncertainty. One economist will tell you, this winter's good for the market, or this winter's good for the market. So anyhow, I don't have a lot to offer today other than don't make problems for yourself. Jen, open it up for some questions, please.
Okay. Let me see here. I've heard Jim say that traders do what works until it doesn't work anymore. When Jim mentions traders buying all breaks or selling all rallies, is he just speaking about momentum, buying the highs or selling the lows, or is there more to unpack there? What am I missing?
You just watch the market. What did they do yesterday? They bought all breaks yesterday. I mean, a little break in B period, they bought it. A little break in C period, they bought it. A little break in D period, they bought it. Then it moved sideways. They bought one break here. I mean, or you can look at the longer bar chart, and you see, the trend is up. And traders, it looked like last week, you had a big break. You had a big break one afternoon down here, and look what they did. They bought the market. You had another break here. They bought the market. The trend is up. And so many of your trading problems will go away if you just do your homework. Ask yourself, what is the market doing? Many times we get messed up because we've listened to some commentator that this is good for the market or bad for the market, and we listen to CNBC, or we read the Wall Street Journal, or we hear some interview, and we get a bias in our mind. And that is very, very costly in so many cases. Look at what the market's doing. What's the current market doing? It's balancing. It's moving sideways, and it's been moving sideways for many days. Don't fight it. Put your biases aside and just listen to what the market's doing. Okay, what else?
Okay. When the market opens inside the previous day's range, does it mean that the odds are we'll have chop only during the early session or throughout the whole day?
Well, it's early session to begin with, but then as you watch the day, and sometimes, so far today, it's chop all day long so far, but that is a narrow range, but that can change. Remember, you've got some Fed speakers, you've got some major auctions coming up. And when the market's, this uncertain, things can change very rapidly. There is no certainty in anything you do in trading. Yes, when you open in within the previous day's range, the odds are much higher you're going to get chopped. That's what you got this morning. The market sold off early because of, a little bit negative news, no follow through, and it's back up very balanced. Okay, what else?
Okay, next question. When you say that excess marks the end of one auction and the beginning of another in the opposite direction, is it possible a new auction without excess? Is it only price excess which marks the end of old business?
No, and remember, trading is an art, not a science. You're looking for exactness in there. You know, here this morning, you got excess on the low, you got excess on the high. Now, right here in the CD low, you got no excess. So the market auction lower, inside auction higher, just a little bit of rotation. Sometimes it gets too long, sometimes it gets too short. But we look at a day like today. Net, there's no direction to the day. There's no direction to today. Don't make it exacting. Don't make it a science. Tone, you know, when you're looking for exact excess, you're looking for something that's very visible. Some of the more important observations are tone, or, you know, when the market was trying to go down here this morning in A period, it was pushing, and it wasn't there. The follow through wasn't there. The volume wasn't there. And so the market was getting itself too short. Well, you have to be able to feel that also. Jen, why don't you do a very short commercial and then we'll go back for a couple more questions.
Sure, one moment. I'll take the screen. 1 second here. Okay, so I know I see some new names here today. If you haven't already joined our mailing list, please go to jimdeltontrading.com/subscribe. And just know that when you have to opt in for our email. So after you sign up, you'll receive an opt-in email that you have to confirm that you indeed do want to opt in. Otherwise, you won't be getting our emails. As a reminder as well, if you don't already follow us on YouTube or X, we don't really do too much on X, but on YouTube we do release a weekly video called The Week Ahead. You may want to subscribe over there. And as Jim mentioned, we do have our last long format final intensive starting next week on October 16th, and it runs through November 15th. It does have a prerequisite requirement of the Foundation and Application of the Market Profile e-course. If you have not done that course yet, unfortunately, you won't be able to join us. The only exception to that rule is if you have done an intensive with us before previously and it's verifiable, then you can bypass the prerequisite requirement. You would need to check with us first before signing up for the intensive to make sure that you qualify. And we've had several people who thought they were qualified by doing a primer. That is not the case. Doing the primer alone or a primer does not qualify you to join us for the intensive. The schedule here, in case you're wondering, is posted on the website. When you purchase an intensive from us, you will get access to the materials for 1 year after it finishes, so that you have enough time to go back and review everything, because it's so webinar heavy. So any of you who have joined us for an intensive before, since this is the last long format one, join us again and get that experience. If you have any questions, you can contact us at our website, email, dalton@jimdeltontrading.com, or our phone number here. I'd be happy to speak with you or to try to help verify if you're qualified to join us. If you're new to us or you haven't done a course with us before, the place to begin would be the Foundation and Application of the Market Profile e-course. This is an 11.5-hour at your own pace e-course. Now, even though it's only 11.5 hours, that's if you never hit pause. There's so much in it, you will have to go through it multiple times. That's all I have to say about that. Any questions, please contact us. Jim, I will give you the screen back and we'll take more questions.
Please.
Okay, there you go.
Okay.
Okay. Let me see here. Okay. With the environment that we are in now, how would you imagine what the market could do? You used to talk about the creative skill of imagining what could unfold in the day.
I walked away from that because what I have realized, there is so much uncertainty in the market that as a short-term trader, your biggest skill is being able to adapt to what the market is giving you. You know, I mean, but you always start by doing your homework. And I always start with the daily bar chart, particularly, well, I look at the monthly, the weekly, but then I really concentrate on the daily. And for example, right now I look on the daily, the market's doing nothing. And then I just relax. I don't try and wishful think. I don't try and make something out of it. I focus as a short-term trader. I focus on being able to react to what the market is doing today. And too many times people overthink the market. They get it in their head that there's going to be a big break or there's going to be a big rally. And they get stubborn about that versus just learn to read. I'm addressing, remember, our emphasis is short-term trading. I'm addressing what is the market doing today. You know, for example, today, it would have been very easy. The bonds were have been suggesting that rates are going higher. The inflation news was a little hotter than expected. And early on, it looked like the market could go down, and it just wasn't there. It just dried up. And if you get in your head that, boy, this market could really break, you got a problem. You get in your head and say, what is the market doing? And the market was building, you know, within yesterday's range. It was a narrow range. There was no real volume on the low. Notice that the 299 contracts on the low, 249 on the high. It just dried up, nothing going on. But so many times you get stubborn because you want something to happen. You want to have a bigger picture of the market and you want to really go after it. It's not there. You can't make it happen. The best thing as a short-term trader is to learn to relax and do what the market is doing. Understand what's going on. Okay, what else?
Okay, we have a lot more questions than what we'll have time to answer because I know you've got to run to an appointment, Jim. So I guess we'll just take these last 2 or 3 here. Okay, yesterday's profile was a P-type distribution. Does that mean that the market got too long and that is why today we are unloading that long inventory?
Not necessarily. I mean, the market looked like short covering. Look, the market. Remember, last week the market had gotten very short, and the market worked, and you went from one extreme to the other, and you got above the probably stops above the 8,000 level, and you get some stops, but you didn't get any new buying in there. But overall, you're in this big, wide trading range. Now, it's still focusing on the what did I say, 8,000 level? What is it? I guess it's 5,800. Don't mind me. I get numbers wrong sometimes. But it's just, there's nothing going on, and don't try and look too hard. Just accept what the market is doing. Yes. Well, do I think it was short covering? Yes. Do I think there was new money buying that came in? No. Do I think it attracted any real selling? No. Okay, what else?
Okay, since the halfback from the previous session held post CPI data today, does that mean that sellers are not in control since lower prices are cutting off activity?
There's just nobody's in control. There's nothing going on. There is no selling. There is no meaningful selling at this point. The market is just in a very, very narrow range. If you start looking too hard and trying to overthink it, you will come up with, some convoluted area that will get you in a lot of trouble. There's simply nothing going on. Okay, what else?
Somebody had a specific question about the NQ and asking if you're tracking a pullback low that was around 20,354-ish on the NQ near I period from the 9th yesterday.
No, I'm not. I haven't looked at the NQ today. I'm sorry. I've got something else going on.
Okay. Do you want to take more questions or do you need to end it here, Jim? Because
No, I can take 2 more. I can take 2 more.
Okay. If overnight inventory is short, for example, and in the opening range it goes lower, but later does not follow through, would we want to think to ourselves that this would increase the odds that we may go higher?
Okay, read the question one more time. If overnight inventory is what?
If overnight inventory is short, for example, and in the opening range it goes lower, but later does not follow through, would we want to think to ourselves that this would increase the odds that we may go higher?
Sure, absolutely. But remember, you're focusing just on overnight inventory. Ask yourself what is happening with value? What is happening with value? Value, so many times people are so focused on price that they forget the bigger picture. The bigger picture is what is happening with value. You know, for example, today the market sold off an A period and said, "Oh, this market go down." But I mean, there was no real acceptance below value from yesterday. No matter what you think, if you think the market's negative, you think the numbers were bad or anything else, guess what? Value's not supporting your beliefs. You're probably going to lose money. But so many times you forget to look at the market generated information. The most important piece of market generated information is value. What is going on with value? Today, this market, I could see people thinking the break, they say yesterday was short covering, that can weaken the market. Oh boy, we got a negative number, bonds are high, yields are higher. Boy, this market could really break. Guess what? Some people thought that and it got nothing. It wasn't there. Okay, final question. But I keep coming back. Focus on what's happening with value, what's really going on in the market. That will, market generated information will help you more than anything. Okay?
Okay. Yesterday, we broke out of the multi-day balance area, and we seem to be holding this area today. Because of that, do you have an upside bias?
No, the market is in a, did we break above the 5,800 level? Yes, we did. And now what have we got? We had a P formation yesterday, so we probably got some, shorts that were triggered when we went above 5,800. We got no follow through. Today we're getting an inside day. Day's not over. Well, let's say by the end of the day, today stays, pretty much where it is today. Well, now I got a 2-day balance, and I'll trade that 2-day balance. Remember, the bigger picture is the market's really gone nowhere for days. We've got an election coming up. We've got a lot of uncertainty. The longer term time frame, at least for now, appears to be on the sideline. Don't overthink the market. I'm sorry, I have an appointment that I have to go to. Let me say thank you very much, and we'll be back with you later. Bye now.
Thank you for joining us today, everybody, and we'll see you next time. Thank you. Bye.